Good weekend, all. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up, your weekly edition for this Friday, the 21st of April, 2023. All right, interesting week. You know, you've compressed all the action. I think the S&P had a 100-point range this week. We're getting a lot of earnings. There's some surprises, more surprises, I think, to the upside than the downside. And we keep hearing from analysts, that you're going to get terrible earnings. Where are they? I am the guy that thought, too, they'd be terrible. They're not so terrible. Is it the laggard effect? I guess to a degree. Is the Fed going to back off on interest rates? No. They're going to keep going. They're going a quarter point now, and depending on the data, we'll see what happens if they go in June again. Too soon to know. I think the May number is locked in. It would take a world event for it not to occur. Something terrible. I don't know what that event would be, but something terrible. So barring that, you're going to get a Fed that's going to, I can tell you the speech already. No, we're not discussing pausing or anything. We're data dependent. We're going to stay data dependent. The labor market's very strong. Inflation in areas is remaining quite sticky, a bit stronger than we thought it would be. This is what I could write a speech for him right now. And you're going to say, I'm wrong. Okay, remember today what I said? You tell me what it comes out. Why? Because if they're data dependent, that's what he has to say. I mean, logic's there. I'm not trying to pick the point at which they pause or they pivot down. Nobody can do that. Throw your dart. That's all that you're doing. You don't know. Nobody knows. Let the events play out. And what's happening is we're not the only country that is seeing the sticky inflation. If you looked at our friends, the UK, at first they weren't going to go anymore. The odds have picked up dramatically that I think they're May 11th, that they're going to go another round of hikes. European central banks going another round. Okay, so you can say all you want. I'm not convinced that I'm buying that we're done with this tightening cycle. And is our economy doing so poor? If it were, wouldn't all these earnings be worse? They're not. Even the mid-tier banks aren't doing that bad. They're surviving. Brian Moynihan this week, it's not a banking crisis. It was unique to that set of banks. I don't know that he's wrong. The panic set in, and now the money's going back to some of them. The Biden their administration, they're going to come in now, and they're going to do something else. They're going to go after the hedge funds and the money markets. They have to, all right, in their opinion. That's not banking. That's an area that under the Trump era, they removed some of those controls. They want to put them back. Of course they want to put them back. They'll go the same route with their very successful energy policy. I won't go there. When we go to Netflix, all right, the market's caught in a broad swath here. I think you see it from low to high. You still have a pattern of higher lows and higher highs? No. You have a pattern of higher lows, but lower highs. You do see that. So you've gone into one of these patterns where you're narrowing in like that. A difficult market at best to try to get a handle on, at best. When we come over to where the market's fighting the battle, are you surprised? I call this the line in the sand. It's the 18-week moving average of closes. Markets that get under it, like you were here, go back, you'll often pause at that number to see what's going on, and then you make up your mind, up, down. Markets that get over it, come back, pause. You don't think that that's what you're doing. What's the next move? If you get over 349.80, I think we'd all get instantly bullish as can be. If you get under 285.33 right here, well, why did that occur? You're back into a bear trend. I don't see a pattern here that you can do anything with just yet. The bigger picture, if you look at Bollinger Bands, you got up to the peak and the pros came out. You got here, you made your run back challenging time and time again, that 18-day average over time. That's where the market makes its mind up from. You're there right now. Can you get bullish from here? I'll give you a way that it gets more bullish. If the market suddenly from here takes out 349.80, higher lows, higher highs, that's the way you get more bullish. Momentum, flat as can be. Is it doing anything? No. Charles Schwab, a bounce, but not a convincing one, is it? Not really. I don't know why. Where do you think the resistance is going to show? Logic tells me the resistance should be the 200-day average in gray. And if it gets through there, wherever the 18-week average is, and it'll fall rather fast. Give you an example. It was 69.82. Then the week before was 71.17, 72.79. So it's about $1.80 a week that it's been dropping. Now this week it'll probably, because you were finally up, not drop quite as much, but it's going to drop down at it. That's what's there. Oversold for sure. A buy, I don't see how. Schlumberger. All right, where's all the demand for the oil service? That's the problem. The trend has been down. You've gone into a bit of a pause against the 18-week, but there's nothing yet friendly. To get friendly, I think you got to get over 53.81. Barring that, the door is still open for the potential to get to the lower Bollinger Band. In KBE, the market came up and took out finally 37.70. Now, what does that do? What it does, and we'll step back on the chart so you can see that. You've broken this pattern that was making lower highs, lower lows, and suddenly you had higher lows but lower highs. And with this week's action, you changed the picture. Now you've got a market that is trying to embed. It's not there. It's still oversold. Why? You have to have at least 3 weeks in a row to embed where both numbers are under 20. It's week one. So you have an oversold market that is signaled at any point here you can get a bounce of size. A big bounce, big one, would be $8 towards wherever that 18-day average is. Is the market a buy? I don't think so, the way that this is. Why? I never tell my clients to buy under an 18-day average for a trend trade. That is not what you have. The bias is down. It's one of your filters. Nothing friendly here. XLI, could it fight more at the 18-day average trying to figure a direction out? It hasn't. The industrial sector sort of just stuck right here. Energy. Okay, energy had a great bounce off OPEC. You do realize the market is still higher from where that OPEC announcement was. There's a gap in the charts that are being filled, and that's about it. In FXE, a lot of resistance here at the 100-day in the upper Bollinger Band. In the gold market, no. Would I tell a client to buy a Bollinger Band? If you've watched me regularly, and I hope you have, and I hope you give me those thumbs up over and over, I appreciate that. I'd never tell you to do that. That's where I think the pro's taking money off. Why? It's the most simplistic thing. The algorithm is designed so that only 5% of the time will the market be above or below the Bollinger Bands. It'll be in them 95% of the time. So where's the sucker play? The guy that's saying, this is the time it's going to keep staying over it. Sure it is. And the Vegas Strip was built with you guys. Forget it. GDX, is there a trend? No. Lower low, higher high, you had your run, but there's bullish action happening beneath everything as we get into the minors. You like that? Beneath everything, digging down? Look at how the 18-day average is getting over the 100-day. It's going to cross over probably this week. Then the 200, that's bullish action. Starting to gradually climb. I don't see anything yet bearish. And if the market were to fall, where do you think the support's going to be? Those are three big numbers. Think of yourself, you're a football player running into the line, right? There's the defensive line. They're waiting for you. I doubt you're getting through them. Tesla, bearish. Yep, the weekly chart has turned bearish. You've got the 18-week average under the 200. You got lower highs, lower lows. In order to negate this pattern, you've got to get back over right up there. What is that number? I think we can get it together here. There you go. 207.79. So to break this bearish pattern, that's what you have to get to. Momentum down, trend down, pros selling. That's where I think their stop will be. I don't think they're going back to 107.66. That'd be giving back half the gains or more that this stock has made when it was down here, but it's giving something back. It's not a pretty looking chart. AMC, I'll let you other guys buy it. Let me give you the kiss of death for AMC if something doesn't happen soon. They're going to do fine in the summer. and we're only mid-April. I'm not betting against them for summer. Then the revenue shuts off again. They have to figure something out now to survive. I don't know what that something is, but that's what they have to do. And if you think I'm a guy who doesn't want to buy movie theaters, well, I would if they can make money. I'm a guy that at those crazy numbers they get up to would be the short seller. Higher lows, higher highs in Apple and embedded. Now, I like this. And you might get even more bullish. You might get the 18 to cross over the 100. So Apple, even on breaks, is looking interesting. Long term, no. Long term, I'm friendly this. TLT, you're going nowhere. But why should you go anywhere, up or down? You got May 3rd, the FOMC meeting. This is a chart you now sit there and you walk away from. Could I be any clearer on it? So you put it together. I try to give you a game plan, and we do it all the time. First, if you're watching me on the YouTube right now, there's a join button. There's also a thumbs up. I hope you give me that every now and then. Number two, you can join me in my morning videos. Now, those are the ones where really everything comes alive for you, because that's where I'm telling you to exactly buy and sell. The reasons, the stops, what to do. I will track the trades that you're in, that I say buy here, sell there. That's it. It's not a running track record. I don't publish a track record, but I'm not going to tell you today to buy GLD and I won't follow through with it. I'm going to follow through with it for the good of the trade. It's not made available to the general public. It's only my subscribers as well. But I think you start getting your hands on for what I'm doing. We give you charting software to go with it via our QT, so you can watch that in terms of on your phones, see the videos. You come to the website, you see the videos. There's 24 videos a month that I averaged doing. Each one 15 to 20 minutes long. On our website, they even have a pull screen that you go and it'll tell you what section you're in. I rotate all the time. I got a lot of the standard ETFs, and then I'm rotating stocks. You can write me as well. I had somebody write me about Coca-Cola yesterday. I create a 30-second to a minute video, walk you through sometimes the daily, the weekly chart, show you what I'm seeing and why. I devote a certain portion of the day. If people write me, I get back to them. The price of Starbucks coffee, one, is almost the price of this for the month. Two, you're over it. I buy Starbucks, so I know what they are, my large ones, all right? With my tip, I'm more money. Okay, so you decide what you want to do with it, all right? 3 for sure, you can count on that, all right. So iraepstein.com, under research, you can click up here at the top. That will give you and take you right to the area. And you've got the Join Me section to do it. Could it be easier? I'm Ira. You have a great weekend. I'll see you Monday morning.